Hello and welcome to the Weekly Forex Outlook at xm.com. Next week, all eyes will be on the U.S. election, as Tuesday, November 5th is the official election day when voters head to the polls. In addition, the Fed, the Reserve Bank of Australia, and the Bank of England will meet to decide on their next policy moves. I'm Maria Bashardez, and joining me is Senior Market Analyst Harlambos Pissouros. So Harlambos, starting over in the U.S., the official election day, Tuesday, is almost here, and presidential candidates Donald Trump and Kamala Harris have had a tight race. According to prediction markets, who is likely to win, and what will this mean for the stock market and the dollar?
Hello, Maria. Yes, as you very correctly pointed out, Trump and Harris are battling neck and neck for the Oval Office. Although Harris entered the race with a decent lead, the gap narrowed significantly over the past days, and the outcome will probably be determined by the battleground states. Now, Trump has pledged to cut taxes and impose import tariffs, especially on Chinese goods, policies that are seen as inflationary. So, a Trump victory may raise speculation for even slower rate reductions by the Fed, and thereby drive treasury yields and the US dollar even higher. Now, how the stock market will perform if Trump wins it is not crystal clear at the moment. Tax cuts and deregulation may be positive developments for Wall Street, but tariffs and slower rate cuts by the Fed are not. So even if stocks trade north just after a potential Trump victory, a pullback may be on the cards in the not too distant future. Now, with the dollar and Wall Street gaining already on the increasing bets of a Trump win, a potential Harris victory may have the opposite market impact, as her plans do not include massive tax reductions as Trump is promising. Having said all that, though, at this point, I need to highlight that whether any policies will be implemented will depend on the composition of the Congress.
Now, 2 days after Election Day, the Fed will announce its monetary policy decision. What are investors expecting, and how might the election outcome change things?
With the latest US data pointing to improvement and no need for a back-to-back 50 basis points rate cut, investors are now penciling in 25 basis points reductions at both this and the December gatherings. However, this may not be a done deal, as a Trump victory on Tuesday could convince more policymakers to agree with Atlanta Fed President Raphael Bostic, who said a few weeks ago that he's totally comfortable with skipping a meeting. Officials could skip a rate cut next week or deliver the expected reduction in order not to catch investors off guard and hit at a December pause. After all, according to Fed Fund futures, there is a 30% chance for a pause in December if a rate cut is delivered next week. So, taking all this into account and also the current market pricing, I think that both those cases argue for further gains in the US dollar.
Two other central banks will meet next week, the Reserve Bank of Australia and the Bank of England. What are we expecting, and how might their decisions impact their respective currencies?
With inflation expectations in Australia remaining elevated, investors are penciling in only a 20% chance for a quarter point reduction by the RBA this year, while such a move is fully priced in for May. So investors will dig into the statement to see whether they are correct in predicting that the RBA will remain on hold for a while longer. Now, as for the Bank of England, with headline inflation falling below the Bank of England's objective of 2% in September, investors are assigning an 80% chance for a quarter point reduction at this meeting, but the probability for this bank to follow with another quarter point reduction in December rests at around 30%. So a rate cut next week on its own is unlikely to shake the pound much. I think that the spotlight may fall on the voting and policymakers' communication. If the votes revealed that the decision for a rate cut was a close call and the statement points again to no rush in further reductions, I believe that the pound could gain ground.
And finally, is there anything else traders should watch out for next week?
Yes, we do get the New Zealand and Canadian employment reports. There are decent probabilities for both the RBA and the Bank of Canada to proceed with more bold rate cuts. There is a 15% chance for the RBA to cut rates by 75 basis points at its upcoming gathering. And there is a 35% chance for the Bank of Canada to opt for a back-to-back 50 basis points reduction. So weak jobs data could convince more market participants to bet on bold action by those two central banks.
Harlamos, thanks so much. This was the Weekly Forex Outlook here at XM.com.